people actually know me as Lynn Kennedy, Business Scotland. And we are here today because we've got Martin Aitken here providing support for Scottish businesses during Covid-19. So I'd like to welcome Tricia and Ewan as our speakers today. They're going to run through various options that are available to businesses at the moment, and then at the end we'll have a sort of questions and answers session. This is, as you've probably heard, they are going to be recorded, and we'll also send you out the link just if you've missed anything today that you can go back and have a listen to. So I'd like to welcome Tricia and you.
Okay, thank you, Lynn. So firstly, good morning and thanks for joining us this morning. Hopefully you'll find the discussion informative and on point for what's happening just now. This morning, as Lynn said, Ewan and I are going to discuss the funding and the support that's available to Scottish businesses with the impact of the coronavirus and the lockdown restrictions. The support that we're going to discuss in particular this morning is the job retention scheme, the self-employed income support scheme, deferral of VAT and income tax payments, grants that were available for businesses, the government-backed loans, the bounce back, the CBILS loan, and some hardship grants that were introduced to help businesses and individuals. I'm going to talk about the first four on that list there, and then Ewan will cover off the loans and his experience on applications and things like that. So before we start, I just thought maybe I'd introduce myself. So as Lynn said, I'm Tricia Halliday. I'm Tax Director at Martin Aitken Co. So we're a firm of chartered accountants based in Glasgow, and we work with a wide range of clients from various different sectors, including manufacturing, construction, healthcare, property sector, food and drink, and high net worth individuals. We work with various different stages of businesses, from startup businesses, early growth stage, businesses that are expanding, and mature businesses. The majority of our clients are owner-managed businesses, and we pride ourselves on the relationship that we have with our clients. We see ourselves as a trusted advisor for lots of different areas across their business. So we don't only advise on the compliance side, which would be preparation of accounts and submission of income tax returns and corporation tax returns. We also advise business owners on how they can ensure that they manage their business to meet their goals and targets. We like to ensure that they maximise any allowances or reliefs that are available for their business. We look at remuneration planning, business investment, EIS, SEISS, research and development, sort of corporate finance, funding, grant applications, and we have a financial services department. So we have a whole range of services on offer, and we sort of look at ourselves as a sort of one-stop shop. Today, though, I'm going to talk particularly about the impact of coronavirus and the support that was on offer. And I recently had an article published in the Businesswoman magazine, so if you haven't had a look at that, it's definitely worth having a flick through. There's quite a lot of information there. But if I can just touch on another article that was in that Businesswoman Scotland magazine that I found particularly good. Haven't read it all in great detail yet, but there was an article on your hair during lockdown. So I'm certainly going to go back to that one and have a good read at that before I have to go back into the office. So yeah, I mean, I think there's a lot covered in that last magazine. So really good read there. So turning to what is on offer just now. So over the past 9 or 10 weeks, I've been advising clients on the new legislation that was introduced by the government following the pandemic and the lockdown at the end of March. And the government, it was good because they quickly realised that they would need to put measures in place to support businesses, employees, employers, individuals, and they introduced the job retention scheme. So that was introduced at the end of March, and since then more than 1 million employers have taken advantage of the scheme, and the government have actually paid out to date 17.5 billion in furlough claims. Now that's only under the job retention scheme, and having looked at some statistics, you know, across the board, I was reading earlier on this week that they think the total cost of this to the UK is probably going to be somewhere in the region of £300 billion. Now, that is a lot of money. And when I was reading the statistics, it was saying that the UK government usually borrow somewhere in the region of about £54 billion on an annual basis. Last month alone, they borrowed 60 billion in 1 month. So the numbers are quite frightening, but the support is there for businesses. Now, what you have to do is know what support is available to you and how do you get that support. And that's where we like to come in for our clients to make sure they know what's available and how they can access all of these things. So the job retention scheme, that one gives all employers the opportunity to furlough workers and claim back 80% of the furloughed worker's wage up to a maximum of £2,500 per month, plus the employer's national insurance and the employer's pension contributions. The scheme was introduced in March, and it would cover wages from the 1st of March 2020. And last week, the Chancellor announced that the scheme is going to close. This first phase of the scheme will close on the 30th of June, but a new flexible furlough scheme will be introduced from the 1st of July. So the changes there, under the current scheme, if you're a furloughed worker, you cannot do any work for your employer, no work whatsoever. However, you are free to take up other employment or volunteer work, but nothing at all for your current employer. Now, in the early days of this scheme, the guidance was changing constantly. You know, it was difficult for employers and advisors to establish who an employer could furlough, what the furlough calculations would look like, how they would interact with current contracts of employment, you know, holiday pay, sick pay, employees that were on maternity pay. But now that we've got to grips with all of that, the scheme will end and we'll have to look at the new guidance on the new scheme that's coming into play from the 1st of July. Now, the good news on the new scheme so far is that it is far more flexible than the previous one, and that the flexible approach for both employers and employees, and it will allow furloughed workers to do some work for an employer. So what that means in reality would be that, for example, an employee could work 1 or 2 days per week for the employer and be furloughed the other 3 or 4 days. So that allows then a kind of phased return to work for most employers and employees. The detailed guidance is still to be set out though, and that's not due to be published until the 12th of June. And just with the experience we had on the first phase of furlough, the current one, then I would still expect that there would be a lot of questions to which the answers aren't available even after the guidance has been published. These things always evolve, and you know the guidance changes after the initial publication. Now, the Chancellor's thinking behind all of that, you know, in my mind, it is to allow a kind of phased return and encourage employers to bring back employees to work and gradually restrict the government contribution to wages. So in terms of the contribution under the second phase of the scheme, they're looking at, currently we get 80% from the government to support the wages. That will continue for July and August. In August, they're not going to pay the employer's national insurance or pension contributions, so employers will have to contribute towards that. In September, the 80% will reduce down to 70% and then down to 60% rate for October, with the maximum caps reducing. Currently the cap is £2,500. That will reduce down to £2,187.50 for September and £1,875 for October as the monthly cap. So questions now for employers, a bit of a challenge there. You know, employers now need to consider who and when to bring back staff from furlough, how to manage the workflow, how to put in place key targets, looking at their expected turnover levels, customer demand, the supplier availability, and the impact in the workforce overall. And I think it'll be interesting to see how many businesses can start to operate under the new flexi furlough arrangements. And it is a good opportunity for businesses to start looking at the changes, slowly transition from lockdown where possible, gives the chance for phased return to work after they ensure that the workplace is safe for employees to return to with the social distancing, etc. in place. And more importantly now, I think we have to look at cash flow projections and management accounts. That'll help employers make the decision on when, you know, the business needs are there, and looking at perhaps, you know, what the expected turnover would be and what furloughed workers they could bring back. If you're in the habit of preparing management accounts and projections, then great, you've got an ideal starting point. If you haven't done that in the past, then now's the time to look at it, start thinking about it, speak to your advisors, your accountant, and see what you can do that will allow you to properly assess where you are in your business, what your expectation is, and who in your workforce do you need to help you do that. And under the flexible arrangement, I think that could really work for some businesses. I welcome that. I think it's definitely an opportunity for employers to consider and review. Now, there's one sort of anomaly, you might call it, in all of this. And in the second phase that starts in July, you cannot introduce any new furloughed workers. And what that actually means is if you have furloughed a worker in the first phase, then you can furlough them in the second phase. The first phase has a criteria set to it where a worker has to be furloughed for a minimum period of 3 weeks. And what that means in reality, if there is someone in your business that you think you might want to furlough over the next 4 months and you haven't already furloughed them, then you have to furlough that employee before the 10th of June. That gives you the 3-week period until the 30th of June when phase 1 closes. And that allows you then to furlough that employee in the second phase. And there's opportunities there. You know, you could furlough that employee on a part-time basis in the second phase. You cannot do that in the first phase. So you have to carefully look at that. So some employers that right now might have felt that they couldn't furlough some workers because they had key skills to their business. So there wasn't an opportunity for them to furlough them without them being able to do any work. So they had to keep them on the payroll because they needed their skills. What you have to consider now is, could you do without those skills for a 3-week period towards the end of June, which would then allow you to furlough that worker in the second phase on a part-time basis? So definitely more flexibility around that, but there are things to be considered. And as I said earlier on, the guidance isn't going to be issued until the 12th of June. And we really don't know what that guidance is going to say. So we have to be careful and think about what are our business needs and how can we best deal with that, bearing in mind that the second phased furlough, you can only use employees or furlough employees that were furloughed during the first phase. So quite a lot to think about there for employers, but we haven't even started thinking about the calculations and what they're going to look like in the second phase. So it'll be very interesting. Our payroll department were very busy during the first phase with all the calculations, and I think that that's going to be very similar in the next phase, especially when you can have this flexible approach and have a part-time furloughed worker. So moving on to the self-employed individuals, and this was another measure that was introduced by the government, and it was introduced in April to provide support for self-employed individuals and partners in partnerships whose business had been adversely affected by COVID-19. The scheme, again, similar to the job retention scheme, and it pays 80% of average earnings calculated over a period of 3 years. Now, the period of 3 years includes tax years 16-17, 17-18 and 18-19. It doesn't take into account the last tax year, which was 19-20. And only individuals who had submitted a self-assessment tax return, a 2019 self-assessment tax return by the 23rd of April 2020, could take part in the scheme, and they had to have an average of less than £50,000 profit per year, with at least 50% of their total income coming from self-employment. Those individuals were entitled to claim the grant. Now, HMRC sent out invites that came in the form of emails, letters, text, whatever information HMRC had available. They used that and they sent invites to self-employed individuals confirming that they qualified under the scheme. Now, unfortunately, for some individuals, that wasn't the case. And that's given a bit of an issue because HMRC were using information that was relevant at 5th of April 2019. But part of the criteria to qualify and be eligible under the grant was that you had continued in self-employment in 2019-20 and that you intended to continue in the current tax year, which is 2021, had it not been for COVID-19. Now, HMRC, any individual that ceased self-employment in 1920, HMRC don't have that information yet. So they sent all these invites out, and unfortunately, some of these individuals have actually claimed the grant and they weren't actually entitled to it. HMRC do have powers to reclaim that grant, and they also have the power to issue a penalty where they feel there was non-compliance. And we do have a small number of clients that have claimed that grant, and I'm speaking to them just now about how they approach this with HMRC, what mechanism is in place for HMRC to repay the grant. And I think it's important, if you have inadvertently or incorrectly claimed it because you thought you were entitled because you received something from HMRC, well, I think to ensure that you don't get a penalty, then you need to be thinking about approaching HMRC to let them know that you claimed it incorrectly and that you are prepared to pay it back as soon as there's a mechanism in place to do that. The grant for the self-employed individuals, again, that has been extended, and the Chancellor announced that there will be a final grant, and that final grant will cover the period from July through to September. But that grant's been reduced to 70% of profit. So same criteria as before, using the same tax years as before, and the cap on it will be £2,190 per month. That scheme will open up in August and it will be paid exactly the same way. It'll be one payment to cover the 3-month period, and HMRC again will send out invites for people to claim when their time is. Now, you don't have to have claimed under the first phase to claim under the second. And the first phase, if you haven't made your claim by the 13th of July, then you're not going to be able to claim because it's going to close for that first round on the 13th of July. So if there's anyone that hasn't made a claim that thinks they're eligible under the Self-Employed Income Support Scheme, then you have to have made that claim by the 13th of July. HMRC, have introduced this Self-Employed Income Support Scheme, and one of the questions that we are constantly asked is, do owner-managed businesses, directors qualify under this scheme? Because in those circumstances, quite a lot of businesses will have taken the approach, you know, it's a director-run business and they have a small salary and the majority of their income comes from dividends, and they consider that to be a self-employed trait. But unfortunately, the answer to that question is no, they do not qualify under the self-employed scheme. HMRC do not consider dividend income as self-employed income. The only option open to those individuals is the job retention scheme. And with the job retention scheme, the government will cover 80% of your wages, and these individuals generally would take a smaller salary. So it might be a salary that's £719 per month. So the maximum that they are going to get is £575 a month, and they will get nothing towards the dividend income. Similarly, people that have furnished holiday letting or rental income, so where the majority of their income comes from, you know, rental income sources, they again aren't considered self-employed. They wouldn't qualify under this scheme either. And there's currently nothing for these two groups of people from the government support. You know, there might be some hardship grants and there's loans that they might be able to look at, but certainly nothing under the self-employed scheme. So that unfortunate for those individuals. Moving on to the deferral of VAT and tax, HMRC very early on announced that they would allow deferral of VAT payments. So any VAT that's due by a business in the period from March through to the 30th of June can until March 2021. And similarly, where you have a second payment on account due under self-assessment, that second payment on account can be deferred until January 2021. And at Martin Aitken, we have actually been using the HMRC's new telephone support line to request time to pay arrangements for other taxes, you know, corporation tax, maybe some income tax that was due in January that hasn't yet been paid. So we've been using that and requesting time to pay arrangements for our clients. And I'm glad to say that HMRC are taking a pragmatic approach, and they have been allowing businesses and individuals to come to an arrangement to pay the outstanding liabilities over a period of time, you know, taking into account their current circumstances, the impact of the coronavirus. And some of those arrangements have been quite long-term arrangements. So that's been good news to see that HMRC are taking that approach. One of the first grants that was introduced was the non-domestic rates grant. So we were advising on that early on, and that's where you have business premises and you're in receipt of the small business bonus scheme. So basically you're paying little to no rates. Then you're entitled to a grant of £10,000 from your local authority. And this grant increased to £25,000 where the business was involved in retail, hospitality, tourism. The applications were pretty straightforward and the funds come through pretty quickly, you know, usually within 10 days, sometimes sooner than that. The good news is that the £10,000 grant can also apply to individuals with furnished holiday letting, but only where they opted to pay business rates rather than council tax. And where you have more than one property, then it applies to multiple properties, but on a reduced rate. So 100%, so the 10,000 for the first property, then reducing to 75%, so 7,500 for remaining properties. As you can imagine, we have been very busy over the last 9 or 10 weeks with everything that's been going on and all the initiatives and things that the government have brought out. We've been inundated with phone calls and emails, and it has been quite challenging sometimes to decipher the new legislation and the constant changes to it, to make sure that our clients are claiming the support which they're entitled to, and to make sure that they know that we're there to support them and give them the reassurance that they want. And very early on, we did recognise that clients were just looking for a bit of reassurance and looking for somebody to tell them what was available. So for us, it was very important that we knew what was available and we knew how to access it. Now, as I said earlier on, some of these clients couldn't access some of the grants and the support that were available because they didn't meet the criteria. So we were looking at what else can we do to help these businesses. And, you know, there are other things that can be considered, and it's looking at what options you have available and looking at planning opportunities here where cash flow is tight. So looking at, are there other release and allowances to which you're entitled? You know, it could be looking at capital allowances. Have you claimed all the capital allowances that you're entitled to? Is there a research and development claim that we can make there? Looking at the business costs, is there anywhere that we can cut the business costs? You know, just to help them plan over the next few months and make sure that they're in the best place possible for their business, for opening back up when lockdown restrictions have been lifted, to make sure they're in a strong place. Our tax planning for life brochure, that has quite a lot of useful and helpful tips for businesses and for individuals, and you can view that on our website. You know, it's there, there's lots in it, and you know, any questions on it, you could certainly get in touch with us. I've covered quite a lot today, so you'll be glad to hear I'm going to hand you over to my colleague Ewan Ferris. Ewan's our Corporate Finance Manager at Martin Aitken, and he will give you an idea of the other forms of support that are available, and he'll take you through his experiences of the application process. And as Lynn said, when Ewan's finished, we're more than happy to answer any questions that you have, or if there's anything you want to chat through, then yep, happy to do that today, not a problem at all. So thank you for listening, and I hope you found what I've just said informative, but if you have questions, then please bring them forward and we can talk through. Okay, Ewan, over to you.
Okay, thanks very much, Tricia. As Tricia said, my name is Ewan Ferris. I'm part of the corporate finance team at Martin Aitken, and typically my sort of day-to-day job involves assisting people buying businesses, selling businesses, raising money for growth plans, getting grants for them, etc. Probably over the last couple of months, the role has completely changed in the sense that a lot of transactions, people buying and selling, have kind of come off the table at the moment because people are clearly worried about what's going to happen. And more of the emphasis has been on getting funding for survival, really, to keep the business going, and extending the runway, the cash flow runway, as far as possible. So that type of work has taken me into the likes of SEISS and Bounce Back and PERF grant applications. So I'm going to chat very briefly about that. I'm also going to talk a little bit about some of the other measures that you perhaps want to take to extend that runway, the cash flow runway, beyond the kind of government schemes. And lastly, just finish off with looking forward, you know, going back to my traditional role, what's the landscape look like at the moment in terms of funding for growth for the future. So I'll finish off with that, and then any questions. So as you're probably aware, one of the early schemes that the government introduced was the Business Interruption Loan Scheme, which otherwise known as SEISS. And then that was followed by the Bounce Back Loan Scheme. It's fair to say the SEISS, you know, obviously came into play. There was a few lenders in the scheme at the beginning, and then as the scheme has gone on, the number of lenders in it has extended. And then obviously Bounce Back came in, and that was a slightly different proposition in the sense that the government was guaranteeing 100% of the loan, whereas under SEISS it was only 80%. And that meant, from the bank's point of view, or the lender's point of view, SEISS exposed them to 20% of the risk. So there was a bit more scrutiny in SEISS than there was under there is under the Bounce Back Loan Scheme. So the reality is that the Bounce Back Loan Scheme is perhaps a little bit of an easier sort of gig for the lenders compared to SEISS. That said, under both schemes, which is good, and SEISS can look at different options around term loan, overdraft, asset finance, etc. So it's not just limited to loans. So quite a lot of people have sort of looked at Bounce Back and thought, oh, that's probably an easier route, and they've applied maybe for the 50k. Slight danger there, I guess, is that the question really is 50k going to be enough for you to get you through this back to normality? And that's really where, I guess, the message that I've had to a lot of clients is you have to kind of take a structured approach to any of these applications for any of these schemes. you have to try and look at the cash flow that you're over the next few months, and that's very, very difficult, because the reality is nobody knows when normality is going to return. Nobody knows what normality is going to look like, and how long it will take to get back up to where you were previously. But you have to try and look at the cash flow over the next few months, look at your outgoings, etc., and try and get a feel as to how much you actually do need, as opposed to just plumping for a number. And to be honest, going through that process does strengthen your application as well, when it comes to the lenders, because you can see that there's a degree of thought going into it as to how you've arrived at the number you're applying for. So these are the two kind of main loan schemes that are available. And as I say, you'll see there's a panel of lenders, both banks and other lenders available that you can tap into to try and get these loans. One of the challenges early on that I came across was clients who were younger business potentially, who had banked with challenger banks, and in the early stages of the scheme, many of these challenger banks weren't on the scheme as approved lenders, and these businesses then had to look to see could they get in touch with another bank or another lender to try and tap into these schemes, and that was quite challenging, but hopefully that's getting a bit easier now. Many of the lenders originally on the scheme were very much focused on their own portfolio and not hugely open to taking on new customers, but I think as the schemes have developed, hopefully that's improved and it's easier to rehouse yourself if you need to with another lender. Okay, so that's CBILS and Bounce Back. The Future Fund is one which is relatively new, and it's very much about providing funding for entities which are in the kind of technology space, innovation space, and you are looking to kind of raise funding for future investment. Now, one of the criteria here is that you have to have previously raised at least 250,000 in equity investment from third parties in the last 5 years. So by virtue of that criteria, that will limit the population a little bit as to who's going to apply. And to be honest, my feel is that this sort of scheme is very much geared to the likes of the businesses that have had funding from business angel syndicates, equity investment in the past, etc., looking for new rounds of funding, and they're in that kind of innovation space, technology space. So it could be quite valuable for them. And in this case, it's a convertible loan where the loans are not repaid, then they'll convert into equity. But it could be quite a useful sort of measure for businesses in that space who have been previously funded through these sort of mechanisms. Moving on, just very briefly, Tricia has touched on the local authority grants, the £10,000, £25,000 grants. The Pivotal Enterprise Resilience Fund was quite an interesting one. That opened up, and that was administered through Scottish Enterprise. It very quickly closed down again because the sheer volume of applications it had reopened and then closed again. And as far as I'm aware, it is now closed. But watch this space, because one of the things I would say about all of these schemes is that the landscape is continually changing, as Tricia's alluded to with the likes of furloughs and things like that. The guidelines are continually changing, new schemes are continually coming into play, schemes are closing, so it's imperative that you try and keep an eye as much as you possibly can on what's happening through the government websites. But PERS was an interesting one, and I think companies now, businesses now are beginning to see the results of their applications in terms of have they got a grant or have they not got a grant. And it can be quite a useful grant, or could have been quite a useful grant if you were looking at expansion and your business obviously had been impacted by COVID, but you had good expansion plans in the future which were going to create employment, etc., and you could demonstrate that your business was pivotal to the Scottish economy, then it could be quite a useful growth fund there in terms of a grant. Similarly, there's hardship funds around for the newly self-employed, where they are able to get a grant up to 2,000, and there was also the creative tourism and hospitality hardship fund, which again is closed. It was similar to PERF, and it's now closed as well. There's also other funds, and this is the thing, you've really got to do quite a bit of research here, because there are funds around, the likes of third sector funds, seafood industry funds. There's also funds through the likes of the Princess Trust, NatWest. There's various sort of small pots of money that are dotted around. That it's a case of just doing as much research as you can just to see, or speaking to your accountant, your business advisor, to see what's appropriate to you, what can you tap into. But as I said in the health warning at the bottom there, we've only covered a few of the schemes here, and there's quite a few other schemes out there, but it is very much a changing landscape. Okay, just looking out with the government schemes, these are some of the things that we've obviously seen clients do to try and extend that cash flow runway as far as possible. And that really is the key, to give yourself as long as you can, cash flow wise, to hopefully see normality coming back. So some of the things they've been looking at are speaking to the landlord and seeing if they can get a break on their rent, more likely to be a deferral than a holiday. So 3 months, 4 months, 5 months of a deferral, obviously added on to the back end of the lease, or the remaining lease payments increased accordingly. Again, speaking to your lenders about any holidays on debt payments. So for instance, asset finance, term loans, etc. And I think the feeling I've been getting from clients is that lenders have been quite amenable to looking at that. They may still charge interest in the meantime, but they part the capital elements. So again, the feeling I get is that's been a fairly good conversation. Speaking to key suppliers, now clearly everybody is chasing cash, and that kind of contradicts to a degree the next bullet point, where you've got to chase debtors to get as much cash in as you can. But the reality is that there is a potential, a bit of leeway with key suppliers if they value the relationship and they're able to support you as well over this period. So perhaps look at some sort of payment plan. But the flip side is you need to be chasing your debts as much as you can. And even now with COVID, it never ceases to amaze me, to be honest, how many businesses are sitting with aged debtors, old aged debt in their ledgers, that I don't know whether they've maybe just decided to focus on the easier wins in terms of the newer debt, and that older debt has just been left there. But the reality is that that is cash that the business can tap into. And we always encourage, even with COVID, we always encourage our clients to look at aged debtors, chase that old debt as much as you possibly can, get the cash into the business. And that's more and more pertinent, obviously, in this current situation, is keep on top of your debtors, keep chasing the cash, interim bill if you can, whatever you need to do to try and keep the cash moving. Similarly, it's amazing how these situations can sometimes bring out efficiencies in the business. So you may look at your cost base and realise that there's certain elements of the cost base that could perhaps be cut or reduced. And again, it's looking at that and looking at things, how you do things. So for example, this is a classic example now of using the technology that's available to have like virtual meetings, virtual seminars, using the social media for your marketing, etc. And that may allow you to cut down on certain other elements. It may allow you to have a smaller office, for example, or it may allow you to cut down on your traditional marketing spend. There's different ways now are coming out that we're using, different methods we're using perhaps that could generate cost-based savings in your business. And one of the things obviously a lot of people have looked at is short-term wage cuts, which is not ideal, but the reality is that's maybe what you have to do, as well as obviously tapping into the likes of the furlough scheme and things as well. Okay, just moving quickly on to some of the tips that we give in terms of just generally applying for COVID-19 funding. One of the first things I would say, first of all, is look at the objectives of the scheme. Each of these schemes maybe has a slightly different objective. And what you want to do is you want to ensure that your application is very much focused correctly. So if you take SEISS, for example, and Bounce Back, it was very much about showing you had a viable business before COVID. You've got a viable business, hopefully, after COVID. But COVID has impacted your business, and SEISS and Bounce Back is very much about bridging that gap between these two ends. If you look at PERF, for example, it's very much focused on you being a pivotal business. You've got an opportunity to grow in the future. You have a particular project, perhaps, which is going to create employment. It's vital to the economy, etc. So look at the criteria of each and the objectives of each scheme and make sure you focus your application correctly. You will find that there's quirks occasionally in some of the schemes. So in the likes of SEISS, for example, they had a financial difficulty clause, which basically looked at your balance sheet at the end of December 19. And for example, if your accumulated losses were more than half of the share capital at December 19, then you weren't eligible for applying for these loans. So again, it's something to watch out for. always think about the economic aspects. The reality is that this money is coming from the government, Scottish Government, UK Government, Scottish Enterprise, whoever it may be, and they are very much focused on the economic picture, jobs, and everything else. So your application has to reflect that. You have to think about what's the job impact. Is this grant or this loan going to safeguard jobs? Is it going to create jobs? You want to bring that out in your applications. I touched on earlier, approach the application in the usual sort of professional way if you were raising any funding. So that is a robust set of financial projections. Make sure your management accounts are up to date. You can supply that with the application. Make sure you have good sets of assumptions. If you have, preferably some sort of business plan perhaps to support what you're doing, which will include, for example, what your COVID-19 strategy is, how you're dealing with it. And most of these schemes are interested in what actions have you taken to mitigate the risk of COVID so far. What other actions have you tapped into furlough? Have you looked at CBILS? Have you had a grant from local authority? But also, what opportunities have come along as well? I think as we were talking about earlier, sometimes businesses actually have seen good opportunities come along in the current situation, and it's outlining how these opportunities look, what they look like, what's the impact of the business, etc. So these are some of the tips there that I would say to have a think about. And one of the key things also is, that fourth last bullet point is why support is needed. It's quite important that you demonstrate. So for instance, in the PERF applications, it was important that you actually showed there was a gap in funding, and that was why the grant was needed. If you showed a cash flow, very positive cash flow, no gap in the funding, etc., then the question mark there is, why do you need funding? And similar scenario with CBILS at the moment as well, I've come across, where if the cash flow looks quite healthy, the question is, well, why do you need CBILS? Why should the bank expose themselves to 20% risk? So you've got to demonstrate why the support is needed. If it's a gap in the cash flow, that's probably the kind of strongest argument. Okay, I'm just going to finish up. As I said at the beginning, my role is normally very much about getting businesses funding for growth. Now, clearly, I've just talked about very much funding for survival over the last few slides. And typically, when we're looking at funding for growth, this slide illustrates roughly where you are in terms of the business cycle and what types of funding you might tap into. So, for example, in the early stage, startup, pre-startup, the businesses are very much looking at equity and grants. So traditionally, that might have been friends and family, business angels. You might be tapping into some of the innovation grants through the likes of Scottish Enterprise, the local authority. And then as you move through the life cycle, you then begin to come into the kind of debt stage, where you can look at the likes of local authorities, you can look at the banks, asset finance, also some of the lenders like UMI and UK Steel for finance as well. And you also might look at further rounds of equity at that point against your business budgets up and running. And I guess really the message there is that a lot of the funders are still saying they're open for business. And the reality is quite a lot of them are very much focused on their existing portfolio and making sure that's safeguarded before they take anything else on. But there is opportunity still to get growth funding. And I'm speaking to a few people at the moment about funds for clients who have managed to stabilise the business through COVID. And they're now looking beyond that, saying, okay, I've got growth here, I've got opportunities. Can I try and get the funding set up now to go and pursue these opportunities? And funders are open to having these discussions at the moment. It can be difficult, and they may end up saying, well, that's great, in principle, I'm up for it. But the reality is, once the normality reappears, I'll then take that discussion forward. But there are discussions to be had about the growth in the future. So my message there is, clearly the first priority has to be stabilise the business. But in reality, think about some of the growth opportunities as well that might be open to you, and begin to look at the financial implications of that and whether you're going to need funding. And it's maybe good to start to have these conversations now if you can, in anticipation of the normality reappearing. And I guess that's really me, what I had to say. So delighted to get any questions.
Great. Who would like to start with the questions? Anyone out there? Oh, everyone's very quiet.
Into silence.
Nobody's. That's unusual. Everyone's very quiet. Everyone has been very quiet. I find it very interesting. I've been obviously keeping up with everything that's been available as well, but it's good to actually just have a recap of everything, just in case we've missed anything, because as you say, it's been a changing picture all the time.
I have a question, if that's okay.
Yes, you go for it, Laura Jean.
Yeah. Obviously, you've given us really succinct information, so thank you for that today. But I think there is just ever-changing information coming out, and every day there's a new announcement of another fund or a deadline and things like that. Where would be the best place to look to access this information? Is it the government website? Is it social media? You know, where should we be following to try and keep up to date with this information?
Probably, to be honest, the government website is where you want to start, because on there is a web page, and it tells you all the things that are available and where available, and it is generally kept up to date. But one client of mine swears by Martin Lewis and says, you know, that it's really good because he seems to be on top of everything. He has a good relationship with lots of different people, and he sometimes can put a different slant on something, you know, that you maybe weren't thinking about. But yeah, I mean, I would probably start with HMRC and then maybe look wider afield to see what else is out there.
I think
I don't know if you
right.
and sorry, Ewan, I was just going to say, I don't know if you about the grants and things.
Yeah, I was going to say, I think, Craig, you probably know about this as well. There's a scheme that's ScotGov.
It's fine business support. That's the website address. It's run by Scottish Enterprise.
Yeah, and it's quite good. It kind of gives you an overview of the funding that is available. You have got to watch sometimes when you Google things that it still looks as though some of the schemes are open. So, for instance, when you Google the Pivotal Enterprise Resource Fund, it still talks about it as though it's open. It's only when you dig closer and deeper that you realise it's actually closed. But certainly that Find Business Support Scheme website is quite a good one as well, just to give you an overview of what funding is available.
Thank you.
That's useful.
I'd also say if you're in the food and drink sector, then I think Scotland Food and Drinks Coronavirus Hub is excellent. I think James Withers has kind of led the charge there for the whole sector there and keeping everything up to date. So there's all the specialised grants for, as you mentioned, seafood providers, some agricultural grants out there, and some support and guidance for bringing in workers for the fruit picking and all that kind of stuff. But no, it is excellent, and it's worth a look if you're in that sector.
Yeah, and similarly, I think some of the creative industries bodies as well have got their website updated for what support is available, particularly for their sectors. So it is very much just trailing around. And to be honest, most of the advisors, the likes of ourselves, etc., are trying to keep up to date with things as well and trying to post it on our website. So again, you know, have a look at your accountant's website and see what's available. And similarly, I think the lawyers are doing the same thing as well. Everybody's trying to pass information around as much as they possibly can so that you are aware. And you know, a few clients have only found out about certain schemes where it's been too late or whatever. So it's key that we all try and pass the information around as much as we can.
So some of the people that are online today are looking at maybe changing accountants, maybe coming to yourself for advice as well. We'll supply them with a generic email, which will go to Craig, I think, if they've got and we can take it from there, whether we make an appointment. I know obviously just now we can't actually meet up, but it could be something, it could be done virtually. And if there's any opportunities for smaller businesses as well, we'll share this recording to our members and put it out on our social media channels tonight as well, and obviously tag you, Martin Aitken as well. So, is there anyone else got any questions just now for the guys while they're here? Because obviously they're
I have a question, if that's okay. It's specific to my situation though. I set up my company as a limited company the end of April last year I'm a sole trader. So I feel like I've missed out on the newly self-employed and the self-employed because I'm not eligible for either. Is there anything else I can apply for?
So you set up a limited company, and that was in April 2019?
Correct, yes.
And do you take a salary from the company?
It's a startup company, so what I earned last year was what I took as a profit, but it's so small. But this year it was really just taken off. I had lots of bookings in my diary, and I felt like it was going to start making a bit of a profit, but then obviously COVID hit.
Well,
So,
what business are you in, Leanne? What
I do cycle tours and corporate wellbeing days out on a bike.
Yeah, so unfortunately you're then caught in you're not self-employed, so the self-employed scheme doesn't apply to you, and the job retention scheme, if your salary, if you did take a salary and it was a small salary, then you would be entitled to be furloughed if you definitely had a salary, unless that salary was processed on an annual basis and it wasn't processed before the 19th of March. So similar to that, we've got a few clients that do their salary on an annual basis, but they don't do it until 31st March each year, so they've lost out. But some of the grants, and I see Ewan was saying the Creative and Tourism grant is closed. I've had other clients that kind of similar to your situation, offering tours, and they applied under the Creative and Tourism grant. So it's probably just keeping an eye on what other grants are out there and available, and perhaps maybe some of the kind of hardship funds, if there's anything there that you could tap into.
Okay, thank you.
It's always worth also speaking to the likes of Business Gateway as well, just to see if they're aware of any schemes that you could tap into as well, any local schemes, for example, because a lot of these websites we've been talking about cover obviously Scottish and UK schemes, but there's no harm always in touching base with local Business Gateway, local authority, just to see if there's anything specific in your area you could tap into as well.
Okay, thank you.
Anyone else get anything from you or Tricia today? No, everyone's quiet. I can't actually see everyone. I can only see Leanne just now, so I'm looking. I can't even see everyone's faces just to see anyone else out there. Well, if that's all the questions for today, I'd just like to thank Ewan, Tricia and Craig for setting everything up for today's webinar. I hope you've all found it very interesting. To say, we will be sharing this because I think there's lots of information there, and sending out contact details. I know there's a couple of people already that want to speak with you as maybe a new company to use. Thank you very much.
If anybody's, sorry to interrupt, but if anybody's got questions that they haven't asked today that they think of as soon as we go off, then certainly just send us an email. I'm more than happy to reply to anything.
That generally happens to me. I always find something I want to ask when I come off, and then I have to do back.
Yeah, I've done that myself.
That's quite common, Tricia. Okay. Well, I think that's us. I do appreciate your time today. I know we're all busy. It's every day ending in a Y at the moment. It's all a wee bit mundane, but hopefully things will bounce back to some form of normality soon.
Whatever that may be.
Whatever that may be, exactly. It's the kind of the unknown at the moment.
Yeah.
Okay, well, thank you again.
Thank you very much.
Thanks very much.
Thank you.
Catch up with everyone soon.
Thank you.
Great.
Thank you.
Thank you. Thanks. Bye.